Hi, and welcome to the September quarter investment update from Clark Pacific. The purpose of this video update is to provide clients with a summary of the last quarter's superannuation investment performance, along with our outlook going forward. We also provide a summary of our investment committee's decisions and the resulting changes to our model portfolios that our premium portfolio clients have access to. We do this each quarter after consultation with our asset consultants, JANA, that provide economic data and opinion. We also interview all fund managers in our model portfolios, along with those that we are considering introducing. The quarter to September this year has been very positive, with the ASX 200 increasing by 7.14% for the quarter, resulting in an annual rise of 9.44% for the year. Internationally, the growth trend has also been similarly strong, with the MSCI rising 5.19% for the quarter and 13.01% for the year. Rates of return for cash continue to fall. We continue to see investors challenged by falling term deposit rates to around 4.45% for the 12 months, and expect this safe haven enjoyed over the last few years to be put under further pressure going forward, resulting in investors looking for other options. In Australia, we believe that many economic indicators are starting to show promising signs that sustained medium-term growth can prevail. The market seems to have factored in 2 interest rate drops of about 0.25% each in the next 12 months that will further stimulate the Australian economy. The Australian dollar continues to remain above parity to the US dollar, and unusually so when commodity prices have fallen so sharply, when the Australian dollar normally falls when commodity prices fall. This is a sign of the relative strength of the Australian economy and our higher interest rate environment. We believe the Australian market still presents many growth opportunities, particularly for non-defensive companies that have not been bought up like many high-yielding defensive stocks, and as a result, still represent good value. As confidence returns to the Australian market, investors will continue to move back into stocks, particularly as interest rates continue to decrease and investors move huge amounts of cash currently in the superannuation system back into equities. It is interesting to note that the recent research showed economic confidence in Australia is about the same level of that in Greece, which is unbelievable given the huge difference in economic performance and outlook. We therefore believe that as this confidence will eventually return to the Australian economy, it will also stimulate and return growth in the process. The Chinese economy appears to be travelling okay, with GDP growth at 7.5% for 2012 and forecast to grow to 8.2% in 2013. We continue to believe in the long-term growth prospects of China as it continues to westernise. We expect China to become the largest economy in the world and the main source of world growth in the short to medium term. The US economy continues to recover, and we expect the certainty provided through the resolution of the recent US elections to add further confidence. On an investment performance front, we are very pleased to see our clients enjoy strong positive returns, with our model portfolios providing returns of 2.24%, 4.19%, 5.62% and 6.4% for the quarter ending September, and annual returns of 6.95%, 10.02%, 11.54% and 13.25% for the year. As you have probably guessed, these performance figures run from most conservative to most aggressive in our model portfolios. We've been particularly pleased with the continued strong performance of our investment philosophy of absolute return. We strongly believe that clients want absolute returns and not relative returns to a benchmark like the ASX 200. This means we do not accept that it is good for a manager to lose money but outperform the benchmark, and expect that you would agree. 2 absolute return funds that we have strongly supported, such as Pengana and Magellan, have performed fantastically well, with returns of 19.3% and 21.89% for the 12 months ending in September. We like these funds because they use cash as their benchmarks and have flexible mandates that allow them to go to cash when required. We are not happy with the performance of the Premium China Fund, with returns of 4.4% for the quarter and just 0.5% for the year. We will continue to monitor this fund before taking any action and possible selling off out of our model portfolios. Our investment committee has decided not to make any changes to our model portfolios for this quarter, but continue to explore investment opportunities for the large portion of portfolios currently in term deposits that we expect to experience further falls in rates of return. So in conclusion, we have had a great quarter for investors and annual returns are starting to look solid. Although there remain many economic concerns on the horizon, we believe that investors should have a confident outlook with regard to economic and investment growth. As always, we'll be communicating our recommendations to clients and of course are happy to discuss any questions or concerns you may have. Thanks for watching this video update and have a great day.